As widely anticipated, the Federal Open Market Committee kept its target range for the federal funds rate unchanged this week. The main news came during Chair Powell's press conference and, to a lesser extent, from the policy statement and the committee's revised interest rate projections, the dot plot. The committee's main message seems to be that they are carefully transitioning from the question of when to stop raising rates to one where to start cutting them. We think the committee will proceed more carefully in this transition than the market currently anticipates. Let's take a closer look. On the surface, the December policy statement was almost unchanged from November, if not for the addition of one particular word. In the November statement, the committee was assessing the extent of additional policy firming that may be appropriate. The December statement now refers to the extent of any additional policy firming that may be appropriate. The chair clarified that the addition of any was an acknowledgement that the committee now believes it is likely at or near the peak rate for this cycle. This is stronger language than Powell's November message, which stated that the committee was not confident yet that its policy stance was sufficiently restrictive. Powell characterized the committee as having faced three main questions since the beginning of the current rate cycle. The first was how fast to raise rates, and the answer was to move quickly at the start. The second question was about how high to raise rates. He suggested that this question remains live, but mostly only to the extent that the committee doesn't want to take the possibility of another hike off the table. And then there is the third question, which is about when to start cutting rates. He noted this question is now beginning to come into view. The market seems to have taken beginning to come into view, together with an increase in the median anticipated number of cuts in 2024, from 2 in the September dot plot to 3 now, as an indication that rate cuts as early as this March are highly likely. We see it differently. We believe that before it starts cutting rates, the committee will want to be confident that inflation is coming down sustainably to 2%. But for that to happen, Powell suggested that they need to see more progress on the inflation front. He also noted that if above-trend GDP growth persists, that could mean we need to keep rates higher for longer or even hike again. So, inflation and growth indicators remain the key data to watch.